First, what is a K shaped economy? A K shaped economy describes a situation where different parts of the economy move at different speeds or even move in opposite directions. With the letter K, one arm moves up, the other arm moves down. The upper arm represents rising wealth, while the lower arm, economic stagnation or falling wealth. Second, who is on which part? Generally, the divide is clear. The winners, people who own assets. If you own your home and you have significant money invested in the stock market, say $1 million dollars or more, your wealth has grown at a rate substantially higher than inflation over the last several years. Even many retirees who are actively taking withdrawals from their investment accounts have still seen their net worth increase. Why? Because asset prices have appreciated faster than the cost of living. Stocks have risen, home values have risen, capital has compounded. And here's something important: studies using Federal Reserve data indicate that the top 10% of households own between 87 and 93% of all US stocks. So when markets rise, who benefits? Those who are on the upper arm of the K. Now let's talk about the lower arm. This includes people who depend primarily on wages to pay their living expenses and people living on fixed incomes without meaningful exposure to the stock market. This group feels inflation immediately: higher utility bills, higher supermarket bills, higher health insurance costs. If wages don't rise fast enough to offset those increases, the math becomes difficult. Their standard of living slowly erodes. It's a constant cycle of cost cutting and financial insecurity. That's life on the lower arm of the K. So when you hear the economy is strong, that may be true for asset owners. And when you hear that families are struggling, that may also be true. In a K shaped economy, people who own appreciating assets tend to move up. People who rely primarily on earned income tend to feel squeezed, and understanding which side of that divide you're on or which side you're moving toward may be one of the most important financial planning conversations you can have. If you'd like to begin that dialogue with me, reach out.